Hey, everybody, we are back on another episode of the Wisconsin Investor. And again, I have another amazing guest for you guys today. And we're going to get into a topic, which I'll introduce here in a minute, that we haven't discussed yet on any of the episodes so far. So I'm super excited for today's episode because I selfishly do these a lot of times because I get to learn from other amazing people. And today's going to be no exception. But before I do that, I want to talk about our sponsor again, as I do every episode, Wisconsin Discount Properties. If you are out there and you are looking for deals, and you're not on our buyers list yet, you need to go out there right now. Go to wisconsindiscountproperties.com, pop your information in, and you're going to get added to our buyers list. And every single week, we're putting deals out in your inbox at 6 a.m. We have inspections. We get on most of the properties. We have walkthrough videos. We try to get quotes on big ticket items for you. So we try to make it as easy as possible for you to be looking at properties and making offers. I said when I started doing this process, I wanted it as easy as you could sit on the can, pull up the little folder that we send out to you and be able to evaluate a deal before you're done and put an offer in right from the can. So get off social media, get to the website, get your information in there and start looking at deals. With that being said, today I want to introduce Mr. Dylan Rusch. Did I say that right, Dylan?
Dylan Rusch, yep, that's correct.
Beautiful. So I got introduced to Dylan from a mutual friend that I met through real estate. So I've had Mitch and Katie Ely on in the past, one of the early episodes. They were partnered with a gentleman named Luke, who they did a motel up in Fish Creek where they converted an old motel model to sort of a new, fresh motel model of, being virtual and doing that sort of stuff. And I've gotten to know those guys. We run into each other all the time up here when they're in town and we talk shop. And I was talking to Luke one day and he said, dude, you got to meet my buddy Dylan. He's doing all this cool stuff in the land space. So as I said, we haven't had anybody on here before doing the land thing. Dylan and I have been going back and forth trying to figure out a time to get him on here. He was sick for a while, and then my schedule wasn't working out, and so I'm so excited to have you on here today, Dylan. Dylan, give us a little background on you and yourself and how you got into this crazy real estate game.
Yeah. Thanks, Corey, so much for having me. It's really cool to know that you have a podcast that's kind of a platform for Wisconsin investors like us. So very cool to see. And got to be honest, it's really surreal to be on a podcast like this because 4 years ago, I didn't own any real estate, didn't know how to renovate a house, didn't really know what a title company does. And if I'm being honest, I still don't really know what a title company does. But now, fast forward to today, I've been on a few like land specific podcasts presented at my local RIA. So It's all pretty surreal, just knowing how far you can come in just a few years. And they say that you can overestimate what you can do in 1 year and kind of underestimate what you can do in 4 or 5 years. And really my journey is very much in line with that. But yeah, got into real estate. It started with paying off debt, doing the Dave Ramsey method. And then that transitioned to financial independence. So my wife and I, after we paid off our private student loans, we were looking to invest as much as we can, hopefully try to retire when we're 45, 50 years old by maximizing retirement accounts. And then as your kind of knowledge within finances goes, I learned that, okay, if I want to exit the job earlier, you can do that through real estate. So read books like Rich Dad, Poor Dad, all that good stuff. Our journey really started, my wife and I, in 2021, late 21. We house hacked our first duplex in Port Washington, Wisconsin, so not far from Lake Michigan. Did a renovation, and then we turned the other unit into an Airbnb. So went the short-term rental route. I think the tenant previously was paying like $500 a month, and then our first month as an STR was in July, so it's our biggest month. But we brought in, I think, $5,100 in that first month, and at that point we were sold. Not every month is like that, certainly, but and then we house hacked our next place in downtown Port Washington, lived there for 12 months. Okay. It was a single family home, moved out, so got 5% down, just all the benefits of owner-occupied financing. So, so we have 4 STRs, and now I'm in the land space too. But that was kind of our journey into real estate, and then getting connected with guys like Luke and Mitch, who are awesome people and great investors too. So
that's
trying to
awesome.
build my network as well.
Man, so think about that, Dylan. You've done the math on this, but for our audience, you took basically a year's worth of long-term rental, somebody wear and tearing your property long-term, and you turned it into basically 1 month-ish of income from somebody or a few different people coming in and out of there. Man, that is awesome. I have not heard of anybody house hacking into a short-term rental on the other unit. That's a great idea. And obviously, you probably had a little bit more expense with that because you have to furnish it, right? So maybe that's
Exactly.
a limiting factor for a lot of people who are house hacking. They typically are doing it because they don't have a lot of capital to put down on the property in the first place. But man, that is an awesome idea. What do you remember what the numbers will look like for the rest of the year? Because like you said, you had the best month there. Do you remember what you ended up at in total like gross revenue for the rest of the year on that unit?
Yeah, on that unit, I'm not sure from July through the end of the year. I know that with that duplex we've since moved out, obviously,
Yeah.
we net about 2,500 to 3 grand every single month between the two units. So that was like definitely a home run deal to get
Oh my
started within your
god.
real estate journey. And it took some sacrifice. We had our daughter at the time, and we were house hacking. So definitely some sacrifice there. And I like to call it like a house hack burster. So we house hacked,
Oh
which is super beneficial. And
yeah.
then we did the rehab, we refinanced, and we rented out as an STR. And then before we moved out of our unit, we did a HELOC on the properties and used that to roll into our next property. So about
Oh
as optimized as you can
oh
get.
my
And it just
gosh.
worked out really well.
I feel like they say like one of the things about Native Americans when they kill an animal, they eat every piece of the animal, they use every piece of it. Like that's what you did right there.
Yeah,
That's called
yeah.
the Native American real estate strategy right there.
Yeah, we should
Yeah,
make t-shirts, I think.
that's right. Bigger pogs ain't got nothing on us after we copyright this, right?
Yeah,
Yeah.
right,
Oh,
right.
that's amazing, dude. That's an awesome strategy. So then when you moved out, you got to keep the HELOC, right? Because it was already in place. So the bank isn't coming back after you trying to close that thing, right?
Exactly. Yeah, and I heard that it was tough to get HELOCs on rental properties, so that's why I just did it before I moved out, and then rolled that into the down payment for the house.
Man, well, I think we could probably wrap right here, Dylan, because I'm like, I want to go send this out to a bunch of people I know that are house hacking right now and be like, you guys got to listen to this clip from Dylan. This is so good. And we're not even talking land yet. We didn't even get to
Yeah.
This is amazing, man. So, okay, talk about that. So you got some of these STRs, you got the property, you got the house hacks going. How did this transition into land happen? Because the natural progression would be just keep stacking those STRs is working well and the rentals are working well and the house hacks working well. Like what had you transition over in to start getting into land?
Yeah, so that was the plan, is to continue stacking rental properties, whether it's STRs, long-term rentals. But I just knew that I ran into a lack of capital. And it's hard to continue house hacking year after year. Eventually, that's going to wear on your family. So I just needed something that was a little bit more scalable. So we had two kids at the time. I was working a demanding corporate job, so I
Okay,
just knew that I had limited time from like a renovation standpoint. I can't
sure.
go and fix houses. And I remember I had to clean one of our units for some reason. Maybe our cleaner couldn't make it. And I heard Ron Apke on the Action Academy podcast, and he talked about land investing. I had never heard about it before, but he said that you can do it fully remote. If you're good with spreadsheets, if you're good being on the phones, you can really make it a very profitable business. So I decided to take a chance and join that land specific mastermind.
Mm,
And I'm also part of a 5-person pod that where all we talk about is land investing. And I
nice.
got started in, I want to say October of 2023. So I haven't even been into it this long or that
Wow.
long. Um, and even like with land, I can put my kids to bed at 7 p.m. even still, and then go and comp land and be in spreadsheets and look at my CRM, make phone calls if I have to. Whereas like it got tougher and tougher to go and renovate some of these houses as you grow your family and also try to ultimately grow your business too.
For sure, 100%, dude. That's one thing I want to go back to is you talked about this specific land specific, mastermind group or whatever it was that you're into. This is how I talk to people all the time about this, Dylan. Is like get in something if you can find it specific for whatever niche you want to be in. There's a couple of people I know that have really grown their short term rental portfolio, so they get in a short term rental mastermind group, and they just all they do is they share back and forth. And what's great is it's in a lot of those, the reason they're successful is because everybody's an open book because you're not competition. This is so and so's down in Florida doing it, so and so's over here, so you can kind of learn the best tricks and tips. And we're in a mastermind group every quarter. I go to the meetings, and it's a mix of land, rentals and whatever. But they have specific rooms that they talk about wholesaling, or they talk about flips, or they talk about construction, or whatever you're into, so you can kind of pick and choose where you want to go. But it's been so helpful for us to get around just people that are like minded and want to achieve the same kind of thing, and you can share some of your knowledge and vendors and strategies and hiccups and hurdles and all that stuff back and forth with each other.
Yeah, 100%. And you're probably a cheap investor like me, where you don't want to spend that money on masterminds, but now that you've done it, you see the fruits of putting your money into masterminds and connections. And I think the best advice that I got in terms of networking and masterminds is like, you can try to learn something for 2 or 3 years, but if you join a mastermind or if you hire a coach and you can learn that in 2 or 3 months, it's worth every single penny. And even today, as I've grown my land business, I think I'm paying my one-on-one land coach who's doing 4 or 5 mil annually. I think I'm paying him well over $1,000 an hour, just for that one-on-one time with him every other week. And it's completely transformed my business.
Yeah. Well, on one of the podcasts, I think it's one that you and I were talking about before we hit record. We had Marcus Krigler on from Beck CFO, and one of the lines that really stuck with me in that podcast, he said, "Everything in your business it should not be an expense; it should be an ROI." And when you look at coaching, right, you're spending $2,000 a month or whatever, but the ROI that you're getting, it should be multiples of that quote unquote expense, but you're really getting a huge ROI on the coaching when you do that correctly in this business.
Absolutely. Yeah, whether it's coaching or whether it's sending out marketing, it's always really important to track your numbers and know your return on ad spend. So yeah, whether it's networking, marketing, sometimes you just got to spend the money to make the money, certainly.
Yeah, for sure. Well, so that's amazing, dude. The land stuff. So talk about comping land, because this is something I've struggled with. There's a couple things I struggle with when we look at land. So we get land leads. We don't market specifically for land leads, but sometimes county records got it listed as a single family property, and we get a call from somebody who's got a piece of land, and they're like, "Hey, I want to sell this thing." And or we have TV commercials, so we get people that call us just inquiring, "Hey, do you guys also buy land?" And a lot of times we're like, "Nah, not really." Like we kind of turn a lot of those away. And part of my struggle has been one, valuing land, right? How do you value the land, especially remotely? Two, who's buying the land? So you got to have an end buyer for this stuff. Are we buying and listing an MLS, holding costs, all that kind of stuff? Like, talk a little bit about those two things, Dylan. Let's start first. Maybe how are you comping it, and then two, who's your end buyer? And I'm sure it's a moving target, but
Yeah, yeah, absolutely. So, how to comp land? I would say that's one of the most important pieces if you are trying to get in the land investing space. It's tough. I would say it's probably 60% science based on data, and then 40% just knowing what you're doing and knowing what makes land valuable. You
okay,
could have a parcel across the street that's zoned residential, but the other parcel is zoned agricultural, and all you can really do is farmland. That completely changes the game from a comping standpoint and from a
mm,
value standpoint. So
okay,
zoning's super important. Things like wetlands, slope, being in a FEMA floodplain, whether it has access to a lake or water frontage, that plays a factor into comping. So that's part of the probably 40% art that's involved.
okay,
And so yeah, comping's tough. It's one of the toughest things to do in the land space. And there's even been deals that I've flipped that I'm like, I'm not sure how this is going to go. And you get a all cash accepted offer in 4 days. And then there's been deals where I'm like, oh, this is a home run deal. And it ends up sitting on the market for 3 or 4 months, which is a long time for me.
yeah,
So yeah, sometimes you just don't know, and you don't know how the market's going to react. And then in terms of end buyers, it kind of depends on the parcel. So I just listed one today. It's just shy of 8 acre parcel in Wapaka, so it's northern Wisconsin. And to me, that's either someone building a home on it, or it's someone looking for a second home and a cabin property. It doesn't have water frontage by any means.
okay,
However, it does have, it's an 8 acre property. It's wooded, so someone could put a cabin on it and then hunt the property as well,
sure,
potentially.
yep,
So it kind of depends on the land as to who your end buyer is.
okay. And probably the region, like you're talking about, like northern Wisconsin, wooded. You're gonna get that avatar of a person. Then you're gonna have maybe something closer to some population that maybe is you're looking maybe for a developer who's gonna lot it off, or like what's the is that accurate, or what's that look like typically when you're looking closer to the metros?
Yeah, yeah. If you're closer to the metros, kind of right around city limits, those are great opportunities to flip to a builder or to another land developer. You
Okay,
take a smaller cut, kind of get that single or double, as opposed to swinging for the fences with the home run by doing the road development costs and incurring all those costs. So yeah, it definitely depends on the region. You sometimes you can have a parcel that's more rural that is perfect for like a hobby farm, which is all the rage these days too, where people want
sure.
their house on 5+ acres plus an outbuilding. Um, So yeah, that comes with experience too, in terms of knowing who your end buyer is, and it's really important to know who your end buyer is when you put together that offer on the front side.
Yeah. And that's the same in residential real estate too, and commercial real estate. Is a lot of times when I'm looking at locking a deal up, I already have a pretty good idea of who could potentially buy that property, and it may not be a specific person, but a specific type of person who's looking to buy that, or I know who's going to be the flipper I wholesale it to, and who's their end buyer, right? Like, are they a
Yep.
family? The things that a family's going to want? Are they going to want a tub or just a full shower? All those types of things that you can kind of start kind of thinking about. So it's the same in the land space, which that's pretty cool. Talk about the wetlands thing. This is something else I've struggled with, Dylan. When I'm looking at a parcel, I don't know if it's wetlands or not. Like, how do you figure that out, or is that something you do once you get it under contract? Then do you go and have somebody go actually tell you what's wetland and what's not wetland?
Yeah, and that's a great question. And due diligence is such an important piece to residential real estate, like you do, Corey, as well as land. So I use a software called Land ID.
Okay.
I think I pay like $80 a month. There's cheaper options there too.
Okay.
And essentially with Land ID, they are able to pull in all of the wetlands on a given property. So wetlands are, I think, delineated by the DNR, so Wisconsin Department of Natural Resources. You
Yeah.
can go on the Wisconsin DNR website and find all wetland properties and areas.
Oh.
That also pulls on to Land ID. So when I get a lead that comes in, kind of the first thing I check is wetlands. Does it have road frontage? Because you don't want a landlocked property.
Mhm.
Um, is it able to be subdivided? Things of that nature from a due diligence standpoint.
Sure.
And then even on the front end, there's another software called Land Portal that I use to pull data.
Okay.
And being able to pull that data has come a long ways, even since I started, where they use AI to filter out wetlands and to filter in a minimum road frontage. So that helps me save money on marketing costs by pulling the right data. So that helps too. So like every lead that does come in, I would say 80% of those leads are at least good land, not a ton of wetlands, has road frontage, just leads that I could potentially do business with.
So you're using Land Portal more on the front end to target who you're going to target with the marketing side of things, and you're using Land ID more so for your due diligence on, is this a decent opportunity? Is there wetland, that kind of stuff?
Exactly, exactly.
Okay.
Yeah, there's a few different softwares out there too, but that's what I currently use.
Okay. Got it. Wow, that's really cool. I've always struggled with that. I think you and I were talking maybe before we recorded, and I met a guy up here in Door County that does some land development, and he was kind of showing me some of these projects he's doing and these kinds of things. And he's talking about some of the deals that he did, and I'm just like, dude, how did you know about wetlands? And he was telling me he just has some guy that is like approved by the DNR that they just walk the property, and he tells them this is wetland, this isn't. He flags it all off for him, and then that's what he goes with. And I'm like, that seems like a really complicated process. Like there should be some website you could just go on it. It should just tell you, kind of like you can see flood zone, right? Like you just go on the website. There's the flood zone. Oh, okay, I don't want to do that one, right? But that's interesting. What about, like, let's talk about this. We had a parcel that was on a river frontage, so there was some wetland area there. But my thought was like, man, it's river frontage. Like people would want to maybe develop this, and we got crickets from buyers. What's been your experience? Have you had experience with some water frontage or river frontage or those types of things where maybe it is wetland, but it still seems desirable? And how have you overcome some of the wetland issue or the flood?
Yeah. I don't get a ton of like lake frontage or river frontage leads that come in. But when I do, I certainly look at them because usually those are more valuable. And really, I think the DNR probably, and don't quote me on this, but I think the DNR just automatically almost puts wetlands around like even a stream or a river a certain amount, just because they don't want that developed or built on. And
Okay.
sometimes you can do, and I think this is what you were referring to earlier, is a wetland delineation study.
Okay.
So like any major subdivision or development project, or even something near water or a river, you can pay a wetland delineator to go and delineate the wetlands. And that can potentially shrink the wetlands that the DNR initially had as like mapped wetlands.
Okay.
And then the wetland delineator kind of has the final say on what you're able to do or not. And I just had
Okay.
one come in within the last week for a development project that I'm potentially doing, and that was a nice $5,000 or $6,000 bill, but it then can open up quite a bit from a development standpoint.
Yeah. Talk a little bit about that one because we were talking a little bit before we hit record on this one. This is pretty cool. what ended up coming back on this thing and what your due diligence, how you were running the numbers originally, and then how this came back on the.
Yeah, yes. So I have a 45-acre parcel under contract currently, and they had two major wetlands on the parcel. So I knew I had to be creative in terms of how to develop it. And there's so much that goes into it. There's town bureaucracy. Maybe you can edit that.
What
Um,
we get it.
Different.
We know what you're trying to say. It's a tough word. It's a tough
It
word.
is.
Yeah.
It is. There's road frontage and access points to county roads. So like, there's so much that goes into some of these development projects. But long story short, I was looking to put in a maybe 800-foot town road and
Okay.
do maybe 11 single family lots between say 2.5 to 5 acre lots. So nice estate lots where people can have outbuildings and whatnot. But what that wetland delineator found was that because I'm within a half mile of city limits, I can potentially, assuming everything gets approved, I can fill those wetlands, develop those wetlands, put roads to those wetlands. So that opens up the entire 45-acre parcel, which would take that one from 11 single family lots to potentially 20 to 24 single family lots.
Wow.
It would mean more road and infrastructure costs. However, more buildings makes it a much more advantageous and desirable parcel for an end buyer, which in this case would likely be a builder.
Okay. Now, are you going to go ahead and go with the? Are you the one that's going to put the roads in, or are you going to get it all approved and entitled, as we maybe would call it, and then go ahead and sell that to a developer to let them go ahead and do the roads, or how do you currently do something like that?
Yeah, so still TBD on that one. I close in the next 2 months or so. So definitely working with local builders to see if there's a price in mind that they have, or they just want to take on the infrastructure costs and then, yes, make some money on the horizontal development from a land standpoint, but also make whatever they make on each house from a net profit standpoint. So I pitched that to one builder in particular. We'll see if he's interested there. I definitely do want to get into some of these development projects. I think it'd be so cool to do this for 30 plus years and help with the housing shortage, I guess, and
Sure.
make a little bit of money along the way. So it's a unique balance between like how much infrastructure and how much expense do you want to incur versus
Yeah.
like, do you take the double from a profitability standpoint, or do you go for the home run and try to
Right.
develop the entire thing, which involves more risk and an economic downturn can really impact you. So there's a lot of different factors there, which I'm
Yeah.
sure you've experienced with some of your projects, Corey.
Well, what's interesting is like I was talking to a couple of people about this before, and I just had Mike Boye on here from our area who just doing new. We talked new. Well, I don't even think we talked new construction on the podcast. This was like after the podcast we talked. But I want to get into doing some new construction. It's just interesting to me. I don't know. Like it's kind of like you. It's almost like I just want to see from nothing to something. Like it's kind of a cool. Like that's why I love before and afters when people flip or when we flip. I love seeing like this was a turd and now it looks amazing and now like a family's going to enjoy like a new amazing home and all that kind of stuff. Like it's that I don't know. I don't know what it is. Like that little pump of adrenaline or whatever you call it, the hormones that you get from feeling like you did something good. I think the same thing in new construction, but the problem I see is like I just want to do one. I want to see how it goes, and then I'll start doing some more. But there's a lot of like you're talking. I'm going to be potentially getting a loan for 500 grand, whatever it is. If I got multiples of those sitting out there, and all of a sudden something happens, I'm stuck holding the bag on a bunch of these new houses, and to rent it and cover the bills are going to be pretty tough to be able to do that if something happens in the market. So that's kind of the scare here. I see the same thing in development. I've looked at doing some development. We've had land opportunities where we could have taken and probably ran with putting the roads in and doing all that stuff. But then I start looking at the cost of all that. And I'm like, oh, I don't even know what I'm doing. Now I'm holding the bag on, a couple $1,000,000 and stuff that
Yep.
I don't even know if it's going to move. So what is have you done any development projects to date, or has everything just been flipping the land so far to this point?
Yeah, mostly flips to this point. I would say like for any listener, the minor subdivides are way easier. So if you have a property that has a bunch of road frontage and you don't need to put in any roads, and you can take a 20-acre parcel and turn it into four parcels at 5 acres each, like that's the bread and butter. I can pay market value even on the buy side, and then just do those minor subdivisions where you don't need, you do need county approval, but you don't need like state approval and all that. So once you get to five parcels or more, that triggers a major subdivision in the state of Wisconsin. And that's where you
Oh,
have to go through all the hoops of a wetland delineator and stuff like that. So there's been a few properties that I'm hoping to get under contract here soon that are, say, 10 plus acres. They're zoned for what I need it for, and then I can pay market value, do a subdivide, and kind of sell at a premium and make a profit that way. And that's what I like with a residential real estate investor, like you do that value add with the house, and it'd be sweet to do that value add with land too.
Yeah. Oh, that's cool. That's a really good nugget. I did not realize that anything over 4 lots. Now you gotta go through a much bigger process, probably a much more expensive process as well, I would imagine.
Yeah, usually.
Yeah. So on something like that, you're gonna go from 1 lot to 4 lots. What is the zoning requirement that you need to make sure that you have, and then what are you looking at for like rough ball costs to get that from like I'm going to purchase it for X, and I know this is going to vary obviously depending on location, but just a rough example maybe of one that you've done in the past of like here's I bought it for this, or I could buy it for this, maybe hypothetically even it costs this to put it in. Here's what I could sell each one for. Net profits this.
Yeah. So one that I'm looking at right now, it's a 13-acre parcel. I would say as is, it's probably worth about 20K an acre, so about 260K, and that's what I'm offering on my end. I have a verbal agreement with the seller. Hopefully that comes to fruition and I get that signed contract. But basically, what I'd be looking to do is, and I've looked at 4 or 5 acre comps, and it's really pretty easy if it's again 4 lots or less. All you really need is a CSM, which is a certified survey map, to
Okay.
take that 13-acre parcel and maybe turn that into 2 6s or 3 4.5 acre parcels. And then it's just knowing the comps, knowing your numbers, getting realtor opinions as well,
Okay.
to understand like, hey, this is what a 4 to 5 acre parcel would sell for. Here's what a 13-acre parcel would sell for as is. But then like involved with that project, I mentioned the surveyor with a 3 or 4 lot split. That could maybe be a couple grand to get
Okay.
the surveyor out there.
Okay.
And then perk tests is a big one that we haven't talked about yet too. That's a huge
Mm,
part of due diligence. So you want to make sure that the land is able to perk for septic,
okay.
because if it doesn't, you're kind of screwed and you can't really build on the land. So like this particular parcel, I have no worries or concerns that it would perk. Um,
Okay.
but that is important too from a due diligence standpoint. So yeah, there's surveys, perk tests. I'm even paying closing costs for as I purchase something, which I'm guessing you do, Corey, as well.
Usually do
Um,
it.
a lot of times paying cash, using private money lenders. So there's a lot of costs that go into some of these flips. So like buy for 30K, sell for 60K. You could think, yeah, I guess that's technically 30K gross profit, but on both sides of the ledger, that gets squeezed a decent amount, maybe 5K on each side at least,
Mm,
between private money, closing costs, stuff like that. So there's a lot more costs that you need to think about in the land space, very similar to the residential space as well.
yeah. No, it's so good. What do you typically pay in private money lenders in the land space? What is the kind of the going rate right now that you're seeing?
Yeah, so because land is so nuanced, like it's hard to collateralize land. So I
Mm,
definitely put that into my terms. But I've been able to build a really strong network of private money lenders. And right now I'm doing 10% preferred return. So hopefully I'm explaining this all correctly. But say someone were to fund a land deal for 100K and it sells within, I think, 3 or 4 months, they would make $10,000. So it's a 10% hit. To them or pop to them within 3 or 4 months. So it's
oh
it's
wow.
steep and it's and I think my average deal in 2025 that I've purchased or that I'm looking to sell has sold in like 2 months. So I'm marketing it really well and I'm getting these investors returns of 10% in just a couple of months, and this may all change, so don't hold this as like
Yeah,
as
you're gonna
scripture
have
here.
you're gonna have people beating the door down at the end of this to give you some money. I think, Dylan, because that's annualized. I don't know what the math is on that, but that's a heck of a return annualized.
It's crazy. It is crazy.
Yeah.
And usually, like for my private lenders, if I mean, I've had cash offers where we close in 18 days and the private money lender's making 10% in 18 days. And again, you can't guarantee this, but then I send them a text like, hey, here's you made this much, 10% in 18 days. Here's what that is annualized. And then they're like, oh, crap, this makes a whole lot of sense. And eventually, like as I scale and grow the business, it'd be nice to bring that down. But it's so rewarding to work with family and friends and help them win too, because that's what it's
One
all about.
100%, man. I love that. And that's in the residential space. We had Jay Connor on, who I know you and I were talking about that as well too, on just raising private money. And that's like one of the biggest things I think when I started was I was afraid to ask people for money, and then I just shifted my mindset. And I was like, wait a minute, I'm actually giving people an opportunity to let their money grow into something that is going to be much better than any options that most of these people have, and so now they can share in the success that I'm having, and I can share with them, and it's kind of a fun little thing that we can do back and forth, and it really is a rewarding experience that you're giving people that otherwise wouldn't have an opportunity to maybe to have their capital grow as quickly as what we can do here in the real estate space. So I love that. That's
Yeah,
such a cool thing.
100%. And if you're confident in what you're doing and you have the track record, again, I've maybe been in the game for less than 2 years now, but I feel like I've been in the game for 5, 10 years just based on experience and number of deals. And it's
Mhm.
so cool. Like I've had my sister and brother-in-law have funded some deals, and that helps pay for my nephew's education. So like just
Yeah.
things like that is super rewarding. So, and I was the same way. So like my first few deals, I funded myself. And as you build the track record, then it's you go on podcasts and people are interested, and you start talking about what you do and posting what you do. People get interested, and that helps too. Where I initially I was so quiet about what I was doing,
Yeah.
and you shouldn't be. You should
Right.
share the cool things that you're doing with family, friends, people online, and try to inspire them that way too.
100%. And I talk about that on the podcast too. It's like share this podcast if you're brand new or you're just getting in the game or you've been in the game for a while and you've been quiet about it. Share the podcast on your social media stuff because that tells other people like it's not like even if you don't want to help us grow, that's great. I don't really care. But more so for you so that you can grow your audience, then they know, oh man, Dylan's into real estate. I didn't know that. Like, look, he shared a real estate podcast. That's interesting. Share it again, another episode. Wow, he's sharing a lot of real estate stuff. I wonder what does he do, and it creates this curiosity about what you're doing, and that's a great way to get referrals. It's a great way to get deals. It's a great way to get money, and it's free. You don't have to send out letters or be on TV commercials like we have to do. A free
Right,
marketing
right.
channel. So use it, right?
Absolutely,
Yeah.
absolutely.
That's great, man. Um, Location wise, Dylan, are you doing? I know you mentioned a couple different spots now. So you're up in northern Wisconsin. Like, are you going to these properties, or is a lot of this stuff just virtual from your home office there?
Yeah, most of it is virtual, and that's what drew me to land investing as well. So I send out a ton of whether it's direct mail. I use a land specific cold calling company as well from a marketing standpoint. So those are my two marketing channels currently. I experimented with PPC as well, but yeah, I'm really all over the state of Wisconsin. I try to be in expensive areas just because that usually lends itself to more potential for developments or minor subdivides. Um, so you just have more wiggle room in more expensive areas. So a lot of times for me, that has been in southeastern Wisconsin, so like Racine County, Ozaukee County, Walworth County, and kind of everything, all those counties in that area.
Mm-hmm.
But I've also had good success up north too. So
Nice.
in 2024, I experimented with targeting other states and whatnot. But there's so much benefit that comes from when I'm talking with the lead and being like, and I'm telling them, hey, I'm from Jackson, Wisconsin. And they can be like, oh, I know where that is, or oh, that's near West Bend or Germantown. So just them knowing that they're talking to someone from Wisconsin
Sure.
gives you just so much more trust and rapport. But yeah, in terms of boots on the ground, I get droners that go out to the property. So as soon as I get something under contract, I get my droner out there. I've worked with a number of droners, and they will snap photos of the property from a due diligence standpoint, but also for a marketing standpoint. Because as soon as I get it under contract, I'm listing it non-MLS to my buyers list,
Okay.
to different places online where I am able to list it to generate interest. And it's crazy to how many deals that I have sold to the end buyer before I even close on the property.
That's awesome. So are you assigning some of these then, or are you closing and are you doing double closes on everything, or how are you typically transacting some of those that you're pre-marketing?
Yeah, so I've assigned one. Usually, I do try to go the double close route. A lot of times, I'll use a transactional funder. There's some national funders out there that'll do like 1%, 2% type of thing, and it's just easier to do a double close. And it's important to work with good companies, title companies, who know how to do a double close because not all of them are created equal.
Right.
So yeah, mostly I do try to do a double close.
Okay. Cool. Is there any reason why you would do a double close over a just assigning it?
Yeah, I have it in my contract that I'm able to assign it.
Okay.
But sometimes it can be a tough discussion where the A in the transaction sees what B me is making, and then the end buyer can see what I bought it for, that sort of thing. And again, it's not shady. It's just flipping contracts essentially.
Yeah.
And really you're taking land that people haven't visited in 3 4 years, and you're getting that to an end buyer who's going to build it, who's going to use it, who's going to hunt on it. So there's definitely value in that. And
100%.
I feel good about it too because of all the marketing expenses that go into running a land business.
For sure.
It's not cheap either.
100%. Yeah, we struggle with that. One thing we did with our title company is we made sure we worked with a few different title companies before, but every single time we did, we're like, hey, if we're going to assign something, you are not putting our assignment fee on the seller statement. It has nothing to do with the seller. It's not. There's no reason for them ever to see our assignment fee. They don't need to see it. And with the buyers, we've had to just have very like upfront conversations when before we say, hey, yes, you will accept your offer. We're like, hey, you're gonna see what we made on this. You cannot care if we make $1 or $1,000,000 on this thing. You have to be okay with what we did. That has no bearing on your number. Don't come back to me and try to renegotiate this thing. If you do, I'll never do another deal with you again. And it's for the most part, it's been pretty smooth sailing
Yeah,
on that end of things. But
and I totally agree. And even like when I go to sell a property, and especially when I'm listing it before closing on it on the buy side, I'm listing it at 80-90% of market value. So that person who's going to be the ultimate end buyer, they're getting a really sweet deal that I don't even have to put on the MLS sometimes. So it's a win-win for kind of everyone involved.
that's awesome. And are you doing a lot of these, Dylan? Are you doing a lot of this due diligence before you start marketing it as well? So like when you go talk to a buyer, you've already got, the perk test figured out, the wetland thing, all that stuff. So are you providing some value in that way as well for the end buyer?
Yeah, yeah. So I really try to package it up for the end buyer. So that will be a perk test that, depending on the property, that can be part of my due diligence where I'm paying a perk test, whether that's 850 bucks, $1,000, whatever it is,
Okay.
because ultimately the end buyer and their realtor is going to want to see that anyways. Again, it kind of depends on the parcel. If it's a 15-acre parcel, I probably won't do a perk test just because it'll perk somewhere on the property.
Yeah.
But yeah, so I do part of that due diligence beforehand, and even some of the minor due diligence items I have from the softwares that I use, and that helps me from a negotiation standpoint as well.
Ah, yes. Good point. Good point. That's really good. I want to go back to the perk test because I I'm like a third grader when it comes to land. What is a perk test?
Yeah, so and I usually ask AI or ChatGPT to explain perk
Yeah.
tests for me too. So I use AI a ton in my business, but so yeah, perk test basically that allows lets you know uh, whether land will perk for a septic system. So you can do a perk test and it'll come back as okay, this land perks for a mound system or a conventional system. And a mound system, everyone's seen them. It's in people's backyards where it's a mound in someone's backyard or front yard. So conventional is definitely better. It's cheaper for the end buyer to have to then install. But
Okay.
that's basically what a perk test shows you.
Okay.
Honestly, when I get those perk tests back from the soil scientists, I plug them into ChatGPT and be like, does this perk for conventional or mound? And I just roll with it because
That's
you
amazing.
gotta kind of stay in your lane and focus on what you can control.
Yeah.
So yeah, I'm definitely not an expert, but I know it's one of the pieces that needs to be done
That's
as
all.
a land investor.
What makes it land not perk? Like what makes it not be able to put anything on it as far as septic or mound or holding tank or any of those kinds of things?
Yeah, that can be a number of things. So it can be just bad soil in the area.
Okay.
It can be wetlands. Sometimes will make it not be able to perk or drain well. So that's basically what the perk test does. Is it tests how soil drains, and then slope can play a factor too because you need your septic system to be parallel with the contour lines or like the slope of a property. So like slope, wetlands. And just different soil types can impact things. I know like in the southeastern part of the United States, especially in like North Carolina, a lot of properties are notorious for not perking, whereas in Wisconsin you can usually at least do a mound system.
Okay. All right, cool. I always thought holding tanks were kind of like a backup. Like if you can't do anything else, you can always throw a holding tank in or something. I don't know if that's true or not.
Yeah. Yep, you
Okay.
can. I've never had to go that route, but I know that you can. I think that incurs a little bit more costs and some nuance to it, but you'll have to have
Yeah.
me back on the podcast and talk about holding tanks if I
That's
ever do
it.
one.
We're gonna do a whole episode on septics and mounds and wells, maybe.
Yeah, right.
Yeah. Yeah. Or we can just ask ChatGPT when we hit
Exactly.
that we're done recording, and it'll tell us all the answers. So no, that's
Right,
awesome.
right.
So buyers wise, going back to this, you were talking about pre-marketing some of this stuff. Are you traditionally looking when you're so you got under contract, now you're gonna go pre-market it. Are you traditionally networking and just like cold calling builders? Is that who you're trying to pre-market it to? Is it realtors? Like who are you typically trying to target with? You said you got a buyers list. Are those developers? Are those realtors? Like who's the avatar on there?
Yeah, a little bit of both. So it kind of depends on the parcel. So I bought two 1.5-ish acre parcels in Waukesha. So Waukesha, really good area, great, expensive too. So like for that one, at first I marketed it to builders to see if they would be interested. Then next in line was realtors who have sold land right in that specific pocket within
Okay.
Waukesha. So it's builders, it's realtors. Kind of depends on the parcel.
Okay.
Sometimes I won't waste my time with pitching a 7 acre parcel to a builder because like what are they going to do with it? Builders want to buy at such a steep discount anyways because they have their own profits to make,
Yeah.
and margins that they genuinely need. So yeah, otherwise it can be potentially listing it on Facebook Marketplace and as a contract to be assigned type of thing, and you get a lot of leads from Facebook Marketplace. It's crazy, and I've sold probably at least 3 to 5 deals to people that I've found from Marketplace.
Wow. And are these typically end buyers then that are going to build and put their own thing on it?
Yeah, yeah, exactly. Or people, it's crazy. I mean, people use land for so much. And even as I got into the land game, I was like, who's going to be the end buyers? Like, I don't know anyone who really buys land, but there's
Yeah.
so many land buyers out there, whether it's for hunting, people who want to put a camper up, people who want their hobby farm, or people who want their dream home. There's so many buyers that are out there. And luckily, I've had success on flipping a lot of these properties pretty quickly, too.
Wow. What is land? So you said you have kind of a buy box. It sounded like what is like a lead that you're like, no, I know like within 30 seconds, this isn't going to work. What's give us maybe some quick crunch criteria that you could easily eliminate some potential, leads that would have you chasing something that's never going to pan out or be worth the squeeze.
Yeah, yeah. So I would say, like for my cold calling service, I get about 50 leads per month, and of those 50 leads, I would say actually I know my numbers. It's about 25 to 30% of those 50 are qualified leads. And
Okay.
how me and my team determine qualified leads is there a decent amount of motivation from the seller? And number two, are they within 120% or less of market value?
Okay.
Because if something's worth 100K and someone has told our cold calling company in the script that they want 200K, we'll just usually move on from that one unless it's a huge development potential, but usually it's not. So
Okay.
that helps you filter out leads and really focus on the good ones.
Okay.
So yeah, motivation and pricing are two huge pieces to know whether I can do business with someone or not.
Okay. What about like infill lots, like in different cities and stuff like that? That's something like I think that's where we've been kind of seeing some of these leads come in, and we're like, I don't know what to. I mean, is this thing worth $1 or 10,000? I don't know. Like, do they have to pay us to buy this lot? I'm not really sure. But like, what do you see with
Right.
some of the infill lots, like in the cities where maybe the surrounding houses are older, the neighborhood's older, that kind of stuff?
Yeah, those are tough to do business with because usually they're, I don't know, quarter acre or less. There's just not a ton of margin where it makes sense for you to then take on a private money lender and do all the due diligence and pay realtor fees. By the end of the day, it's not really worth your time as a land investor. So even on the front end, a lot of times, depending on the county or the area, my minimum acreage will be typically half acre at the least amount,
Okay.
but usually it's like the minimum is about 2 acres. So I don't see a lot of those infill lots. There
Okay.
are land investors that are out there where they just focus on infill lots,
Okay.
um, and they kind of go that route, but I just don't see it as being worth my time.
Yeah. Okay. Cool. I'm not crazy then, because I got a buddy of mine. He's doing new construction in North Carolina, and he does a lot of infill lots. But I think where he's at is the surrounding area is nice. Like it's like you put up a new house, it doesn't look out of place. Where like in Green Bay, for example, if I go
Yeah,
downtown Green Bay and I try to put up a new construction, it's gonna look like a fish out of water, right? And they always want to say
right.
you want to be the ugliest house on the nicest block, right? And you're the opposite when you do a new construction. You're the nicest house on an ugly block. Probably
Totally.
not going to have the spread there.
Yep,
So
exactly.
yeah, that's awesome. Dylan, anything else that our audience should know about new construction, or not new construction, but land flip, land development, any of that kind of stuff that maybe we didn't get to at this point yet, that may be relevant for somebody out there listening to this that might have an interest in this?
Yeah, yeah. I would say land is really kind of a blue ocean in terms of like finding leads where you can maybe get something rezoned. Like there's so much
Mm,
opportunity within land, and I would say the one thing that's important to know, you can listen to something on a podcast and think it's the next best thing. I do spend a ton of money in marketing. It's usually between marketing and my team, it's probably $6,000 to $10,000 every single month. So it is a capital intensive business. But now I'm starting to get the machine moving. I'm starting to build a very lean and mean team. So there's a lot of costs that go into it, but honestly, it just takes one or two deals to kind of get back your marketing costs, and then you're kind of off to the races and trying to build a legitimate business. So land is fun. I could talk about it all day, and
Yeah.
yeah, feel free to have anyone reach out to me, and I'd love to help if you are interested in getting into land, or you get a land deal that you want to run by me. I'd be happy to comp it or have my team do that, and I'll send some house leads your way too, Corey,
There
if
we
I ever come
go.
across those.
That's what we're talking about. Now, what about JVs? Like, what if I have something? Could I JV something with you, Dylan?
Absolutely. Absolutely.
Sweet.
Yeah. And I've done that before. And I guess another important thing, like with land, there's so much opportunity in terms of how you structure a deal. Like you can use a private money lender, pay on debt. You can do a JV from an equity standpoint. And even like my big 45-acre parcel, I'm buying that on seller financing. And you can negotiate the interest rate, as you know, Corey. And there's just so much opportunity. You can even sell land on seller financing. So a lot of the real estate listeners who love their monthly rent payments, well, you can still do the same thing with land if you sell
Yeah.
something on a land contract. So there's so much opportunity in land that it's been a blast.
Yeah, I got a good buddy who's down in Florida, but he's a coach for a land business, and how he built a ton of his passive income was out in Colorado. He lived in Colorado for a long time, and he would buy these parcels, sell them to people who want to put their ATV or camper on it, and he did it all. He'd buy it on seller financing, and he'd sell it on seller financing, and just wrap the mortgage and get the spread between what he was paying the seller. He'd mark up the price, keep a spread on the interest rate plus on the higher purchase price, and he's got mailbox money coming in on land, and there's no toilets to fix. There's no
Right.
roofs breaking down. I mean, it's a pretty cool, attractive model there. Not that I want to talk anybody out of residential real estate, because I need you guys to buy wholesale deals, but maybe we'll start throwing some land in on some of this stuff as well with maybe some help from Dylan here. So that's
Yeah.
awesome. Dylan, if anybody wanted to talk about a land deal with you, or joint venture with you, or just talk to you about land, what's the best way for them to get in contact with you, man?
Yeah, I would say just reach out to me on Facebook, Dylan Rusch. So it's DYLANRUSCH. And then I'm on Instagram. I try to post as much as I can. I'm so busy within my deals that I've forgotten about posting on social media a ton.
Yeah.
But I think my Instagram handle is DRUSCH5. But feel free to DM me, and I'd be happy to connect and JV on something, or just help people out, which is super important too.
Beautiful. Well, I got one I'm going to run past you as soon as we hit stop record on this. So
I love it.
maybe we'll be JVN before the day's over here. Oh, we'll see.
Perfect.
Well, everybody, thanks for tuning in. Before we let you go, Dylan, we always ask one final question, and this is we have people outside of Wisconsin listening to this. They're thinking about maybe investing in Wisconsin, and so we like to give them a little flavor of what Wisconsin's all about. What is your favorite Wisconsin tradition or place to visit here in the state?
Yeah, my wife and I have a soft spot in our heart for Madison, Wisconsin. Obviously, it's the state capital. That's where we met. We went to college there, and we just love it. The bike paths, all the events, the Badger games, the parties, the tailgating. Madison's awesome. We love it, and we lived there for a while after college too, and we definitely miss it. But if you're ever in the state, I would definitely recommend checking out Madison and having a
Cool.
great time.
Yeah, especially if you can pair it in with a football game
Right.
at the stadium there, dude. It's an awesome environment for sure. Great time. State Street, you can't miss that.
Yeah, can't beat it.
No, awesome, man. Well, guys, if you got some value out of this, I say this every episode. I said it earlier in the episode, so if you're still listening, that means you got some value out of this. You didn't tune us out yet. Please share this. Again, it's going to help your brand. It's going to help people know what you do, but it also helps us get more ears listening to this, and it helps us spread the word, get more people investing in Wisconsin, bring in more opportunities for you to JV with some really cool people like Dylan, and allows us to bring other guests on here. So share the episode if you got some value out of it. If you're interested in talking about real estate, you're not ready to get on a buyer's list yet, and you want some advice from somebody from our team, you can go to our website, wisconsindiscountproperties.com. Just put your information in the contact us form instead of putting your information on the front page. And somebody from our team will reach out to you, and we'll have a conversation. Just see if you're needing some help getting connected to some lenders or some contractors or some other cool people. We can always be there as a resource for you to help you in this fun journey we call real estate. Because as you can tell from Dylan and I, we just love talking about real estate. So we're not opposed to hopping on calls with you. So that's it for this episode, guys. We'll see you on the next show.